Okay, good morning. Today, Tuesday, December 5th, 2017, 9:14 a.m. Uh, let's start with this video over here that I selected for you guys. Let me take a look. Stephen Roach, Senior Fellow, Yellow University.
Wary of the so-called unintended consequences, and this tax plan will have plenty of those. Yes, it'll be very generous in cutting taxes for American companies, even though they don't need the tax cuts, as the politicians would insist. But because the U.S. doesn't save, it will put pressure on our balance of payments deficit and our trade deficit. And the Trump administration has strongly held views that the best way to make America great again is to reduce trade deficits with countries like China, Japan, South Korea, Mexico, even Germany. And in fact, this plan, by putting pressure on national saving, will actually make our trade deficits worse with these and other nations, and putting more pressure on middle class American workers that it purports to provide comfort for.
Nonpartisan analysis suggests that the tax reform bill is going to add about $1 trillion to the American deficit. So are you saying that the tax reform bill overall is likely to result in short-term gain but long-term pain for many Americans?
Well, I don't even know about the short-term gains. I mean, the gains that will be evident will be largely in the form of corporate earnings, as one of your previous commentators alluded to. But whether or not those are reflected as gains for the broad cross-section of Americans, that remains to be seen, and I'm highly dubious of that. But the long-term consequences for today's saving short U.S. economy could well be very consequential and worrisome insofar as the trade deficit analysis that I just offered up suggests.
Okay, good morning, guys. The news that I kind of opened over here was on my Google cards over here on my cell phone is about the Bitcoin moving towards the $12,000. The top economist on Tuesday sent a stark warning on investors. The cryptocurrency is in a dangerous speculative bubble. This is a toxic concept for investors, says Stephen Roach, Yale University senior fellow and the former Asia chairman and chief economist at investment Bank of Morgan Stanley. Roach, described by Ellis as one of Wall Street's most influential economists, spent the bulk of his 30 years career at Morgan Stanley heading up a highly regarded team economists around the world. Um, and he say more things in the bottom here. Let me show you guys a little bit. I don't know why my my website is like this, but anyway, dangerous speculative bubble by any shadow of a stretch of the imagination. He told CNBC the rundown. Um, Bitcoin has surged more than 1,000% this year, accelerated by rising interest from retail and institutional investors who view the digital currency as a possible future means of exchange and store of value. Major exchanges like CME and CBOE have also legitimized the currency investment's credentials by saying that they plan to introduce futures contracts to their respective exchange, likely further supporting, sorry, the price. Many investors admit to not understanding the technicalities of instrument of blockchain technology that underpins its existence, hoping instead to profit on the expectation that the Bitcoin as an investment will simply continues to rise. Like all bubbles, they burst, Roche say. They go down, and the one who's made the last investments gets hurt the most. There is no question about it. I disagree because, sorry guys, because as you can see, we're moving up to the $12,000. And I was looking early, I put it like, oh, but let's do the last 6 hours and 5 minutes, showing that steady move and a sideways change, which is, it's a great, I think it's a sideways trade is good instead of the last 4 hours. See, as you can see, the last 24 hours, it's going to increase a lot of volume here on the bottom. So that's the way it's going to be for Bitcoin by the end of the year. We approach the 31st of December 17, and that's the way it goes. One coin that I was looking at and I predicted was low and 0.9 cents. I was making some little profits in this one. It was Stellar. I should have moved all my XRP to Stellar. I could have doubled my money at this point because when I saw first it was 4 cents, I bought some, and now it's 10 cents. And I believe this go up to close to 40 cents. NXT stopped right there at 40 cents. Pretty much every other coin kind of go increase a little and then it stop, it go down a little bit. Like even XRP, one time it was up 28 cents, start go down again 24. But this is gonna be like probably next year, January to March or April, you're gonna see this XRP increase a little bit. But Ethereum Classic always seen as an ugly duck from Ethereum. It was the first fork. Nothing happened so far. Went up to almost $30 and now dropped to 28. Ethereum, the regular one, 455. Zcash 316. Bitcoin Cash kind of ranging on 1500. Uh, Augur $35. Dash 752. Litecoin 101. Bitcoin $11,700. Stellar 10 cents, and Monero 231. Question. I want you guys see if you can send me some comments on this one. So the three majors for Coinbase, which is Bitcoin, Ethereum, and Litecoin, only one actually was able to increase progressively hard up was Bitcoin. Bitcoin has for 1 year like 1,461%. Ethereum 6,000% for 1 year. And Litecoin 2,000% in a year. Okay, if you look at this number, that's okay. But for the last like month, only 87%, 54%, 56%. Of course, 56% at a high number is gonna be much high currency over here. So what I'm saying is, well, why even all the percentage that they increase, why the price of Dash it's almost double from Ethereum and 7 times more than Litecoin. Even not go too far. Why Monero? If you look at Monero for the last, I was looking over here month, pretty much, which is the price was down here at $80. It's almost triple the price at this point. In a month, it tripled the price. If you look as Litecoin, only not even quite double the money. Why don't triple? Be, I don't know why. I mean, I really want an explanation this one. Other than that, guys, markets halfway green, halfway red. Today's Tuesday. A lot of movement out there. The regular stock markets, it has some issues out there with the Nasdaq, with technology been hit pretty bad. 71.1% down for Nasdaq, 70 points. Hopefully this changes by the end of the year, if not next year. In the cryptocurrency world, we don't have much to do with them, but might have some issues, especially the technology. Probably kind of taking the money out of that, put over here. That could be the reason. They don't say that, but that could be the reason. So that's the reason we see a lot of growth over here in the coins, especially with the Litecoin. Ethereum kind of hold. I mean, past the 300 barrel, it was 280 the low, 350 the high. So past $100 for the barrel, the 300. So now the next stop, it's supposed to be, if I'm not mistaken, was reading somewhere. The next stop is 650. So we see how it goes. For Litecoin, I have something to Google say the price is supposed to be go up to 1,000 anytime shorter than we believe. So hopefully, I didn't do it yet because the Cash, Monero, and even Zcash too. Also, it's another one that I want to point out. I forgot it to mention that. But Zcash in a month, no, Zcash actually was always high on the 200, so just increase a little bit, almost double the price. It has a big dip. So Zcash, Dash, and Monero has increased double, triple the price for the last month, month and a half. Instead, Litecoin, Ethereum, and Bitcoin actually is the only one actually increased a lot, but Litecoin and Ethereum didn't move as much than the other ones. I think because part of this is because they use the uses for Dash, Zcash, and Monero is more uh, out there than the Litecoin. That could be a reason too. But anyways, if you guys have anything, please let me know. Thank you for watching this video. Please subscribe, spread the word, and let's keep investing on. Let's keep buying some cryptocurrency out there. All right, guys. Thank you for watching. See you next time. Bye.